Back to Hayes Miller right now, portfolio manager at Baring Asset Management, talking about emerging markets. And Hayes, you point out that a lot of the commodity stocks are, exporting companies. You like, though, looking at emerging markets, domestic growth ideas over exporters. Why is that?
Right. Well, we're just a little bit worried that the entire market shift and focus on exporters played out pretty hard for about 18 months, and it was towards the latter part of this period. It's really been geared towards Chinese infrastructure spending and Chinese inventories in most industrial metals, as well as in a variety of other commodities, have reached very large levels, and we're starting to see rollover in an awful lot of Chinese imports for these things. So we're a little bit concerned that the amount of buying going forward might tail off, and that could lead to some severely strong days in commodity markets. Do you see those, Hayes, those domestic markets really showing the kind of growth that you say would have seen in the U.S. during boom times here? Right. So at the same time, you're looking at markets like Indonesia and Turkey and Brazil, to a certain extent, that have really built a lot of their recent growth on domestic credit expansion. And what you have is a lot of banks in these markets that practice, surprisingly enough, banking. They take in deposits and they loan them out for a spread. And they don't have these problems that Western financial institutions have, and they have a lot of capacity to continue to extend loans. And we're seeing a lot of private loan expansion. We're seeing company investment that's been somewhat weak starting to come back, and the combination of those two items could be very, very strong in those markets that have large populations and potentially stronger credit growth. So that is the big distinction today, is the quality of earnings from domestic growth from what has been a stronger earnings orientation. And finally, I would say that because we would anticipate that emerging markets currencies would continue to strengthen against the U.S. dollar, that for commodity-producing countries, there will continue to be a squeeze on their profits just due simply to currency movements.
Hey, it's just got a few seconds left here. I mean, so in terms of, let's say, the next 6 to 12 months, are you anticipating that these emerging markets, and I know I'm going to lop them all together in one group, and I know they're all individual, but nonetheless, generally, do you expect emerging markets to pull back somewhat?
Yeah, you can't lump them all together, and you have to treat them individually. The sad thing is that when you look at emerging right now, it's very hard to make large-scale categorizations. You really have to be more selective, and that's right on down to the stock level. We like financials. We like consumer discretionary. We don't like industrials.
All right, got it. Hayes, thank you so much. Hayes Miller of Baring Asset Management.